Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. HII, sinking or setting sail. About the company and industry. Huntington Ingalls Industries, HII, is the largest American manufacturer of warships, supplying aircraft carriers, submarines, and destroyers to the U.S. Navy. The defense sector is considered defensive, meaning the company should perform better than others during economic downturns. Industry outlook. The U.S. defense budget remains stable, and geopolitical tensions, especially with China and Russia, could lead to increased military spending. However, rising production costs and a potential economic slowdown may pressure Pentagon budgets, creating risks for future contracts. Q4 2024 financial results. HII disappointed investors with weaker-than-expected earnings. Earnings per share (EPS) came in at $3.15, missing analyst expectations of $3.38 and marking a 54% year-over-year decline from $6.90. In Q4 2002, revenue reached $3.0 billion, slightly below forecasts of $3.05 billion. Operating margin dropped to 3.7%, down sharply from 15.45% a year ago. Net income was $123 million. On a positive note, the company maintained its dividend at $1.35 per share. Future outlook. Despite a weak Q4, HII expects revenue and profit growth in the coming years. For the full year 2024, the company forecasts EPS of $14.38 and revenue of $11.6 billion. In 2025, EPS is expected to rise to $15.78, with revenue reaching $12.1 billion. By 2026, EPS is projected to climb to $18.04, with revenue increasing to $12.6 billion. While these forecasts suggest long-term growth, improving profitability will be key. Market trends and technical analysis. In recent days, capital has been flowing out of HII, indicating that investors have been taking profits or reducing exposure ahead of potential further declines. Previously, support was at $191, with resistance around $19. However, with the after-hours price now at $175, the technical picture has changed. A new support level could form around $170, and if the price falls below that, further declines toward $165 are possible. In the short term, resistance is now around $180. Valuation and analyst recommendations. The average analyst price target is $220, implying a 12% upside from recent levels. The lowest target is $180, while the highest reaches $303. Among analysts, 1 recommends buy, 10 suggest holding, 2 advise selling. Most analysts believe the best approach is to hold and wait for further developments. Economic cycle impact on HII. The economy is currently in a slowdown phase, characterized by rising unemployment and declining production, investment, and demand. Best performing sectors in this phase: energy, real estate, consumer staples, and utilities. Worst performing sectors: industrials, which includes HII and technology. This means HII faces a tough environment, as industrial stocks tend to struggle during slowdowns. Interest rates and their impact. If the Federal Reserve keeps interest rates high, companies with low liquidity and high debt, like HII, may face financial challenges. However, if the Fed starts cutting rates in the second half of 2025, it could ease financial pressures, making debt financing cheaper and improving HII's outlook. Short squeeze, is it possible? Currently, there are no strong indicators of heavy short selling, meaning a short squeeze scenario is unlikely. Final verdict: buy, hold, or sell. Reasons to buy. The defense sector is stable, offering long-term security. Dividend payments remain intact, providing income for investors. Future revenue and profit growth projections suggest long-term potential. Reasons to sell. Weak Q4 results could trigger further downside. Sharp decline in operating margins raises concerns. Current economic conditions are unfavorable for industrial stocks. Conclusion. The best strategy seems to be to hold the stock, as long-term growth prospects remain intact, but short-term downside risk is high. Monitoring Federal Reserve policy and future military contracts will be crucial for investors. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU, number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.